Let's talk about unfiled tax returns. Basically, what has happened is that you've got a tax return that you're supposed to file. If it's an individual tax return, you're supposed to file it by April 15th of the calendar year following the year that you're filing taxes for. If it's an employment tax, like an unfiled 941 employer's quarterly return, or a 940 at the end of the year, which is your employer's annual return, you're supposed to send these both into the IRS. Now, the IRS deals with both of them the exact same way. If you don't mail them in, eventually they're going to contact you and say, hey, you've not filed a tax return. Either it's an individual or business. I'm going to deal with them both the same way for this discussion. So what happens is they're going to mail you a letter and they're going to say, hey, you've not filed your tax return. We need to receive it within the next 30 days. Another letter is going to come and another letter is going to come. Then you're going to get a final letter that's going to say something to the effect that if we don't receive a notice from you, a letter from you with your tax return information within the next 30 days, they're going to propose an assessment. And that assessment basically means they're going to take whatever information they can find for you and they're going to create an estimated tax return on your behalf. They're going to create a tax base from it and a tax assessment. And what's going to happen is they're going to start charging you interest and penalties off of that amount, and then they will take aggressive actions to collect those funds. So first, let me talk about the individual tax return. What will happen is if you don't file a return, after about a year or two, typically at 2 years, they're going to mail you those letters. If you don't respond, they're going to go to the record and they're going to look for every 941, not 941, they're going to look for your W-2s and 1099s. And they're going to say, this person made $50,000. They're going to take that $50,000. They're going to place it into the tax table at the highest marginal rate, typically 25 to 28%. And that's going to be the amount of tax that they're going to assume that you owe. Then they're going to start aggressively coming after you to collect that tax. Now, if you are a business owner and you have 941 employer's quarterly tax returns, the ones that you file every 3 months, or the annual unemployment return, which is a 940, they do the exact same thing. They'll mail you some letters. If you don't respond, they'll create a tax assessment from some estimated information. Now, for businesses, it's slightly different. They'll either go back and look at historical numbers and take an average of those numbers, or they will go to the state where you reside and take any reported state income taxes that you've paid for your employers. And they'll take that amount, create your tax based off of either one of those, either an estimate of which you paid in the past, or state information that you found, or any information they can find to come up with what they think you paid. They will create that tax assessment, and then they'll start trying to collect that money. Now, we'll talk about collecting later in some later videos later discussions I want to have with you. But at this point, the IRS is trying to collect some money off of an estimated tax return. At this point, you definitely want to get someone involved to help you get those tax returns done. Now, most individuals will come to me and say, well, Vern, listen, I can't find my W-2s from those years. The company's out of business, or I'm no longer living in an area and I can't find it. I can get that information for you. It's very easy for me to access it with the IRS. If you are a business, it's a little more difficult, but I have some forensic training, some forensic accounting background where I can go and kind of recreate your payroll from those periods and come up with the best estimate for you. At that point, I use my expertise to go back into the IRS system, take the actual information that you provided to me, either for your individual or your business returns. We can take all those old, incorrect, estimated taxes out of the computer system and replace it with your actual information. Now, you still may actually owe some tax, but it definitely won't be the IRS's estimate, because I'm going to tell you, having done this for almost 10 years for the IRS's assessment and their estimate is always going to be higher than what you actually should have filed and paid on. So what you're going to do is give us a call here at TaxGuard. We can definitely help you out in this process. It's not a quick turnaround. We have to recreate your tax returns for you, gather information, and compile it, create a new tax return for you, and file it to the IRS. That turnaround time from the time I get the information to them until they replace the information with their estimates to what you actually are giving me, that turnaround time is usually somewhere between 8 to 12 weeks. But after that 12-week period is over, once they've replaced all the information, all the old stuff will come out, all the old penalties will come out, all the old interest will go away. Then they'll replace it with what it should have been. And now we can move forward with either having you pay no tax because maybe you didn't have any tax due. If you had a refund due, then maybe you'll get some refunds monies back. Or if you do owe, then we can place you onto an installment agreement that you can afford that helps you maintain your lifestyle and move forward. So again, if you have any unfiled tax returns, come to me. We can definitely help you out with that, and we'll get you back on the right track.